Hey, welcome back to Coffee Tech Talk. It's another Tuesday. How's it going, Marty?
Hey, it's going great. It seems like forever since we've been
It's
here.
been a couple weeks, right?
Yeah.
Like the last show we talked about espresso machines, right? Slayer, is that right?
Yeah, sure,
I-
sure. It's been so
Yep.
long. It's I've slept since then. Yeah.
And I think and it's it's springtime and things are being planted. And I saw this like on your social media world of this
Yeah.
Carolina Reaper, and I'm like, oh my gosh, what is that?
I don't know.
Like,
We'll find out. I hear they're a little spicy. Um,
yeah, I heard they're dangerous. I actually kind of did some Wikipedia on this, and
yeah.
is it true that if you even touch them, you could burn yourself? That
I don't know. There's a lot of folklore in them. I do know that they're hot. They are hell for hot.
yeah.
Um, so we'll see. So that I've never grown them before. So we'll see. I do like hot. I don't like so hot that you you're in pain for a while. But I like spice, so um, use it sparingly.
Yeah, I got one today too. So I got some free plants. Like how jogging after work or whatever, and just kind of like jogging around the neighborhood. I found a couple free plants from the local community crops garden. They're just kind of giving
There you go.
plants away. It was pretty
How
awesome.
how spicy is that squash?
I don't know. I took the tomato plant. You can't see it; it's to the left.
Oh,
But
okay.
I just thought that was kind of it's a fun way to just kind of add to my garden and just get some more free plants from
Yeah,
the neighborhood. Just walk around. It's kind of neat.
that is pretty neat.
Yeah. Well, today I got, I just, about a week or two ago, oh, maybe a couple weeks ago, this new book came out. It's called Cheap Coffee, right? It's by Karl Wienhold. So I say, hey, I'll just see if I can find him and see if I can get him on the show. And guess what? He's on the show.
Yeah, I'm excited.
He's in the waiting room having maybe some seltzer water or some just plain water. I don't know. Maybe we'll see him in there. How's it going? Hey, see you in a real short bit. How's it going? Great to have him there. Yeah. So that we're gonna have a show. We're gonna talk about coffee economics, maybe some political economy, and a bunch of other stuff. I read this book and it's intense. It's something that I have been waiting for quite a while to read a book like this that kind of captures all of the issues. These are complex issues. There's a lot of social economics. There's a lot of things that will take some time to kind of digest, but it's definitely worth a read. I mean, if you want to talk about sustainable coffee, or you want to talk about the price paid to farmers, whatever, you should probably read this book first before you jump to the conclusions of saying all of those things.
Sure.
There's a lot to understand here.
I was talking to you earlier, and of all the coffee facets that there are, and the ones that I've been exposed to, this whole thing I was telling you earlier that that's the one thing that scares me or is most foreign to me. Is that I've been exposed to it, but I feel like it's the least part of coffee that I am cognizant of.
Right. Well, I spend most of my day in this world of talking with coffee trading and working with the cooperatives in Peru and Colombia with El Finca and looking for viable ways to connect cooperatives with buyers and I think Karl does quite a bit of the same sort of work, and when I started talking with him, I was just kind of really amazed with the amount of information that he had. But I think that you do, and I also do, deal with a lot of these issues every day in our own lives. For example, on Facebook, there was this meme that was going around today. It says, "What happens in your head when you add 28 plus 47? Explain your process. New math versus old math fascinates me. It's cool to see how people's minds work." Well, you want to know what my answer was?
Sure, let's hear it. I know what mine was, but
I'll give you $50 for it. That's how I think. Sorry. Do you get it? I'm sorry.
Yeah, I get it. I was at a fast food joint working on that thought process of make things go away. I was at a fast food restaurant and there was a little argument between a customer and the staff on a refund. And I had a headache that day. I was right there at the machine, right there. I couldn't get away from them. And they were arguing over like 38 cents. So I grabbed a $1 bill and just reached over and shoved it out there and said that should take care of it, and went back to work. And just yeah, give me $50. I like your thought process.
Well, and it's a different thought process because, you know, it depends on, well, what's the value of what we were talking about? Obviously, this is 75, I think, I hope, if I'm doing my mouth right,
Well,
depending on, but I'm saying like, well, maybe it's a used thing that's not worth that much and they're asking for too much. So I'll give you $50 for it. But that's what's going through my head with this math process. It's like valuation and what does that mean when it comes to the coffee world? And that's sort of the transition here.
Well, maybe
yeah.
maybe that's why you get this stuff and I don't, because and hopefully this will be a segue or help segue into what you're talking about, because I wasn't thinking that at all. I was actually thinking the mechanics of doing that math.
Yeah.
So I round this one down, I round that one up, put the big numbers together, add the little numbers together. If it goes over 10, put that to the big, you know how old math works.
And yeah, exactly. Yeah. And then there's going to be a finite number at the end of 75. And that's exactly what the number is. And sometimes I think when you walk into a grocery store in the United States or whatever, you know, it's just like, that's the price that you pay, period. But, you know, in the coffee world, it's really interesting where you have like all these, you have as a producing country, you always have to give offers and they always change. And it's the value of coffee is always going up and down. Like today, the C market jumped 10 cents. That's a drastic change. And if they're constantly trying to come up with offers because there's more coffee and there's less, buyers.
Well,
so,
when you're talking,
it's
not to interrupt you,
yeah.
but on that thought process, when you're talking scale like that, when you're talking coffee, you can't do the shortcuts like what we're talking about. You can't slide the dollar over there to make a 38-cent problem go away, because when you're buying containers, that 10 cents is a lot.
Oh yeah.
Pennies are a lot. So you have to get, I know enough about it to know that you can't just round things. You have to know what you're talking about. Maybe that's what scares me.
Yeah. This also scares me. So accounts receivable, as a small business, like when you're doing a job, basically, what does this mean? I think, I put this, do the work now, get paid later. And that's kind of a risky way of, that's work, right? In most
Sure.
cases, you have to do the work first and then you get paid later. But, as your own business, like running your own business, you have to set your own standards as far as, are you giving net 30, net 60, net 90, or, do they owe that to you in a year? Or do you ask for cash, upon delivery? And,
sure.
And that really matters, because if you are a sole proprietor, or if you have a couple $1 million in the bank, that will impact your life differently. So
yeah, and that's all rounds
topic.
up to credit. And so where's that credit coming from? Is that coming from a third party? Is that coming from the supplier that's giving you net on your payments to them? Or are you going to your brother-in-law and saying, hey, I need this money to go buy a product so I can resell, and I'll pay you back when I resell it? How's the mechanics of that work? So there's a lot of options there, a lot of things, good and positive on a lot of those facets.
And then just my last slide before we get to Karl is just the this little picture of it's just a very simple visual of who, if I was a customer and I went somewhere and I wanted to have someone supply me with something and I wanted to trust them, who would I go to? Would I go to the left or the right? Would I go to the place that has a lot of cups that are really well organized and they look ample and organized? Or would I go to a really small one with maybe one big cup and one small cup, and there's not a whole lot there? I mean, I feel like there might be like less experience, less everything, and here it's more organized and more of everything. And I think that just the innate decision that people make, like they want to go big they want to be secure, and they want to get organized. Yet that leaves this other entity at a challenge, because it's just risky to do business with that. So we're going to talk about how do you do business with that? How do you do business with the little entities?
The little guy.
Yeah, and there's ways to do it. So let's chat about it, and maybe Karl can help us figure this out. Not that you shouldn't do business with the well-organized larger entity either, but we're going to talk about this. So, hey Karl, how's it going?
Hi John, doing very well, thanks.
So,
hi Marty.
Hello, welcome.
Yeah.
Thank you.
So where are you? Where are you located right now?
I'm in my apartment in Pereira, Colombia.
Okay. And so how are things, you know, I shouldn't really say how are things in Colombia, but how are things in Colombia? Seriously. Yeah.
Well, tense in a word, to avoid going down the rabbit hole, unless that's what we want to do.
Right.
But yeah, it's generally pretty tense.
Yeah, well, I'm glad to have you on the show today. And I guess we could talk about that all episode, but I think that maybe there's another time we should maybe address that. But I think this all kind of wraps up together. I don't know. Well, you also have one thing about you that I found out about is that you have a pretty good YouTube channel also, with quite a bit of information that that I would suggest everybody watching check out. And this is great information. So how long have you been, involved with, doing this YouTube channel, and what was this? How did you get started with doing this?
I guess the YouTube channel was like last April or May. Basically, in the past, I'd travel around to try to sell coffee on behalf of the farmers I represent. I had to cancel all my trips last year, and I thought, well, what am I even good for? So I kind of thought about the conversations I usually have with roasters and other folks when I'm on these trips that ideally lead to them choosing to buy coffee from the farmers I work with. And well, I can't have these conversations this year, so I just started making them into videos, kind of because I didn't know what else to do.
Yeah, I mean, it's like every video that you have put up there, it's just chock full of information. So I suggest everybody out there that has not yet purchased this book, go out and go ahead and get a copy of it. And while you're waiting, check out all these videos, so then you can be prepared to digest the information in the book. That's what I would suggest.
There's a bit of overlap. The other reason was because the publishing of the book was delayed a while, and I thought, well, I'm sitting on all this information. I spent so much time putting all this stuff together, so I might as well put it into a little bit different format for some of these little chunks that require a little more calculation, explanation.
And also, I think that Roast Magazine had something to do with this. Were they published the book, partially published the book, or what was their role?
Yeah, totally published, edited, published, made it way better than I could have.
Yeah, I'd say like I'm a huge fan of Roast Magazine. Everything that they put out is of high quality. So I wasn't expecting any less, and they this absolutely delivered. So it is chock full of information. And today I tried to put together a book review, because I did read it front to back and I took notes. And maybe I went a little overboard. So we'll see how well we do today.
No, not John.
Getting through this. But it has absolutely helped me do my job better in the last 2 weeks. I've thought more deeply about what I do on a day-to-day basis. And yeah, so I thank you for writing this book. And I think that this is going to really open a lot of people's hearts and minds, and make them think harder about what's happening throughout the supply chain. It's not an easy read. But it's definitely a valuable one. And if anybody out there wants to talk about it, absolutely call me, and maybe Karl, maybe they can call you too. But I'd love to chat about it above and beyond this hour that we have together. I grabbed this from your social media because you said I could. And I think and you have relationships that are in Colombia with different organizations, associations. Can you tell us a little bit about your involvement there and what you're doing in Colombia currently?
Sure. I work with Cedro Alto as a coffee farmers collective. So there are about 250 smallholder coffee farmers that I guess the way I normally describe it was we're kind of left behind by this direct trade movement just due to their size and scale, access to capital, among other resources. So about 7-8 years ago, I started out translating emails between small farmers and small roasters, and fell down a rabbit hole, and now that's about all I do. But basically, there are folks that are making high quality coffee that have historically not had access to the channels that get that into the hands of the folks who appreciate it most. So we work together, pool our collective scale to be able to fill up containers and do things that we wouldn't be able to do on our own.
And so these are not considered to be cooperatives, right? Or is this an association? Are there any formal entities, or is this just how is this organized?
Well, you caught me with my pants down, as they say. With that, we're in the process of formalizing a lot more about this group, but yeah, for the moment, it's a pretty loosely defined affiliation of colleagues.
That's great. No, that's great. Everything doesn't always have to be completely perfectly organized in the world of coffee to make an impact. And so this is the book. This is here it is, Behind the Curtain of the Global Coffee Trade. And it absolutely, has a very catchy title. And I think that, the first thing that came to my mind is that maybe people will think, well, then just, pay more for coffee. And I think that, yes, that is a part of maybe one of the many different solutions that come to answering this, or that, that it's much more complicated than that. Because you can spend $5 a pound for green coffee, or $10 a pound for green coffee, or I think we're even going to address that later, like, for example, Kona. But that's not going to really address the deeper core issues that you're addressing in this book, or globally. Is that right?
Yeah.
And I think
that's pretty much it.
Okay, we'll just shoot by that one. Okay.
Actually, this is my first time doing this. Basically the point, the whole title is that you can pay more, and that's good, and that's probably one of the only levers we have access to right now. But the problem is that coffee is allowed to be cheap, that it can be cheap, that we can make it more expensive voluntarily, but that ultimately boils down to a donation. If you're paying more than what you have to get something. And I think the job won't be done until coffee you have to pay a price to get it that makes it a viable livelihood for the people behind it.
Right. And so there are so many, when I asked you what kind of frame or lens you kind of approached writing this book through, you mentioned that somewhat of an encyclopedia from top to bottom. Also, and it does kind of read like an encyclopedia. There's 4 different sections. I guess we could actually go to this with the table of contents. The introduction to coffee economics. I highly suggest everybody really kind of take a look at that. And if you don't want to read it all at once, that's fine too. But there are sections, that you definitely you can peruse through. So yeah, really well written again. I don't do a lot of interviews of authors of books either. So this is kind of I'm just winging this too. So on page 32, I'm listing the page numbers here for everybody who's watching this so they can reference it later. So if they have their book at home, they can open up to page 32 and read about supplier managed inventory as a topic that I found was, personally interesting. And I wanted to bring it up to you because you also provided a slide about it. And in general, supplier managed inventory is a fancy way of saying that importers will finance a lot of coffee for roasters. Like, so when a roaster wants some coffee, they'll buy a whole full container's worth of coffee, and they don't have to pay for it. The importer will finance that coffee and hold it at a warehouse, and they can just kind of receive that coffee one bag at a time, or however many bags they need per week, right?
Yeah.
And that helps the roaster quite a bit. And that also helps the importer get the attention of the roaster. But how does that impact the farmer?
Yeah, so basically this is where traders fulfill a lot of the role of banks and extending credit to roasters in one way or another, whether you look at it that way or not. But yeah, basically a roaster can forward book or contract coffee and only pay for it as they take it. In a lot of cases, quite a while after they take ownership of it, and taking it as needed, little by little, most probably. But then, when a farmer says, well, look, this roaster's paying this price for my coffee, that's way less than what I'm getting paid. Why don't I just sell this roaster? Or, hey, I've got a cousin in Germany who might be able to, help me get a hold of some roasters, and good, and maybe that could be the case. But when the roaster's business model relies on having that credit in, managing their cash flow in that way, and having that all the cash that they would be spending on coffee freed up, or even more than that, and then a farmer who if they're a small farmer, probably doesn't have access to credit, and probably can't wait several months or even over a year to get paid for whatever amount of coffee they're harvesting from a small farm. It really isn't an option anymore. So this is a big barrier to entry for a lot of origin country based entities, be they farmers or small entrepreneurs or whoever, to be able to work directly with roasters who then depend on that that financial model.
And you do have are one of your YouTube videos specifically explaining this? I think I watched a video about this, but anyway, it's a great chapter in the book. You explain it really well here, so everybody check it out. Here is another just another topic: producer country consolidators and exporters. Could you explain a little bit further about the impact of well, do you want to talk about this?
Sure.
I was going to try to skip over this one because I got some other stuff, but so what are the roles of these consolidators and exporters? And a lot of the times I think we talk about coyotes. Is that right? And everybody just says, oh, the coyote is always taking a cut, but there's some aspect that they're actually kind of important, right?
Yeah, absolutely. I mean, there are a lot of jobs that need to be done between farmers and roasters. The ones on the production countryside have in a lot of ways a very different role from the ones on the importing side who take a more financial role. But of course on the exporting side, the role is very much financial also. Among other really tough jobs. I guess if I were to say what do intermediaries do, aside from the functional roles, the biggest structural roles are financing and assuming risk, which you could argue is the same thing. Some farmers say most of the farms in the world are small. So let's say small farmers are harvesting over the course of several months. They're probably going to be selling coffee little by little throughout that harvest. That's how most do here in Colombia. I don't know about some other areas. But you can't export 20 kilos of coffee. You can't run it through a mill because nothing will come out the other side. So somebody's got to be there, receiving all these small amounts, moving them around, taking the risk that something might happen to them, gauging this quality if that's what they do, and then taking the inventory risk to say, yeah, I think this coffee's good. I think somebody's going to buy this coffee for whatever price. So I'm going to pay this farmer today, but I don't really know. I don't know where the market's going to be a few months from now when the harvest's over and finally get it milled and put on a boat. So the fact is there are a lot of jobs that need to be done. And when we call for less coyotes or less intermediaries, if somebody else is willing to do the job, fine, but somebody needs to do it. And in a lot of cases, small farmers aren't really set up to be able to handle these things. And if they can't handle them, it's in a lot of cases not going to be in a way that's as efficient as people who specialize in these things, which would leave less money on the table at the end of the day for farmers. So I kind of try to explain this, like what are these roles that somebody needs to take care of.
And you do a great job of it. And I think that there are two different types of well, there's many different types, but from what I've witnessed, there are those that are well financed, and then there are also cooperatives that have a different structure of financing often that are typically also gathering coffee from their membership base, and sometimes they struggle to gather coffee from their members when other entities that are possibly private have a larger or better financing. So I think page 34 is another great little bit of dialogue. Everybody, if you'd like to check it out, open up your book to page 34 and read it. I think it was really great insight that I learned a lot about. Some coffee importers can borrow at 3%, while local traders in Uganda borrow money at 27%. Just seeing that difference in that reality doesn't make it an even playing field in a global market. And I think that was a really well point to that I took out of that.
Yeah, statement. I just wanted to add that there's nobody's at fault for taking advantage of the interest rate that's accessible to them. But this this difference in access to capital is it's a real thing, and we should be comprehend what's possible for some folks and others. And I also want to note that I think this quote here is someone else's words. I don't remember whose, but this is from a speech someone made. In their case, those are the numbers. I don't know what the numbers would be for everyone.
I could probably look it up for you very quickly. It's page 34, and then in the back you have it all listed. So if you have a book, turn to page 34, look at the back, and you can find that. So it's all there.
Yeah, that and anything else that you would say no, that can't be right. There are like over 1,000 citations in there. So I tried to keep my own words out of it as much as possible. So there's someone else you can take it up with all the way in the tiny print at the back of the book.
Yeah, and this is another great concept, page 65. We can even dive into this, or it's 7:30 and we're only halfway through the slides, so we might want to keep on moving. But there's this idea, this concept of a race to the bottom, and through my career over the last 15 years of buying and selling coffee and many other things, it seems like that I have been faced with this race and a part of it, and I've seen myself get tied up in it, and it's a very difficult thing to defeat and also change. But I've never given up on trying to make that change. But how does this apply specifically to the coffee supply chain in short, with coffee producers? How does that impact that?
I can't promise in short, but
okay, go for it. You got 5 minutes. I'll cut you off when it's good.
The idea is basically cost competition on the price you can offer based on your cost structure, be it the cost of producing coffee, exporting coffee, the cost of labor, and you see this pop up in all kinds of things, especially commodities, whether it's like the sewing of t-shirts. If you're charging more than the cheapest one out there everywhere in the entire world, you're not going to get the business. Of course, unless you can differentiate in some other way. But in commodities, in theory, there is no differentiation. But anyhow, this is basically when things are interchangeable, when it's all the same, you don't really care who you get it from. You always want to get the cheapest. So if you want to be a player, a seller in that world, you've got to be the cheapest, or else people are going to buy somewhere else.
And that's where they, if you're out to get a contract of let's say a new chain of somewhere, and they need you to hit a certain price point, and it's 5 cents less, you have to find that coffee that's 5 cents less, or else you don't get that bid. you don't get that business. If you don't get that business, you're not doing your job. If you don't do your job, you don't have an employment.
Yeah.
And that is the race to the bottom. It's no one's fault. That's just how it is. And that's how everybody is, you know? I mean, Marty, do you have anything to add to that? Have you seen that happen in your life, or have you been?
Oh, absolutely. And it's a balance act. It can be dangerous to race to the bottom on any product, whether it's coffee or a service. You can make it unsustainable at that point for a lot of people. Everyone's got to have enough part of the pie to sustain the system from source to the consumer. So I understand the economics of it, and I understand the dynamics of it, and trying to make profits by lowering cost along that chain. But this whole concept of race to the bottom can be a dangerous thing for any industry, whether it's coffee or anyone else.
Yeah. And,
Yeah.
you know, one of the main, you know, on page 31, you brought up substitution. I think that is a part of the results of race to the bottom is, you know, this is one of those aspects. If you wanted to read this, but it says if roasters don't care which origin they need, buying the cheapest ones, traders in each country and the countries themselves are pinned against each other in a price war to get the roasters business based on price and little more. So again, I've witnessed this too. Like there's talking about, I think it's Peru, Nicaragua, Honduras, Mexico, you know, basically all mild Arabica, whatever is the cheapest on the C market with the lowest differential, that's what they want, right? So if the differential's higher in Peru, that's not good for Peru. If it's lower in Honduras, that's good for Honduras. So is that pretty much what this means to you?
Yeah, that's basically what it's about. That you know, I don't care which one it is. They're all pretty much the same to me. So why would I choose based on anything but price? Of course, it's not that extreme in real life all the time, but there's definitely, you know, a combination of different origins that you can use, and a combination of different grades that you can use to take advantage of how the price are distributed at any time. To achieve a really similar result. And you know, that's the way you optimize. And if you're you know, a financial controller or analyst somewhere, that's your job. You've got to do that, or you're not doing your job right.
And how much coffee
is just, you know, built into the structure?
And how much coffee do you think is traded in this kind of in this kind of way, in this substitution way? I mean, are we talking 80%, 20%, or most coffee is unidentifiable to a certain point? Or I guess we'll see. Maybe not.
I'm afraid to venture a guess with those numbers.
Then we can move on.
And I can't say that everybody. I can't even say that most people are using this to necessarily reduce costs. I think most folks need to make sure that, you know, the cost is where it needs to be. And of course, there are other things you can do by you know, changing around components and origins to, you know, get done what you want to get done.
Sorry, I got a little passionate about that one. So unhedged volatility equals urgency on page 63 was another subject that really popped out to me when reading the book. And I guess there's this question: how would access to financing improve the ability for cooperatives and consolidators to offer high quality coffees? And when I wrote that, yeah, I guess I tied it to that subject. So
yeah, so basically you buy something, you sell something later. What happens in the time in between? If there's volatility, you're at risk. You buy, you know, you're a small association or a co-op in a town somewhere. You fill up your warehouse every Saturday, and you've got to empty it by the following Saturday to have cash in hand to fill it up again, because the producers are going to come, and if you don't have cash to give them, they might not come back. But what happens in those 5 days between? You know, like you can see here, the delay. So on the one hand, how much cash do you have? Are you able to keep operating for more than like 1 day? to be able to look for the best buyer, the buyer who pays the most or appreciates what you're doing the most, or shares your values or whatever you're looking for. And the other thing is just that, what if you spend all your cash, fill up that warehouse because the price is at a certain level, and then 5 days later or 5 weeks later, when you get around to selling it, it's fallen. Well, you lose money. You've decapitalized your organization, and you can't do as much business as you used to be able to. So if you can't hedge that volatility with financial instruments or with whatever you decide to use, you've got to make things happen really quickly, and probably not finding the ideal buyer who appreciates that coffee the most, just because you've got to get out of that position of risk.
Well, we have about 20 more slides, so we're going to get to the next one.
All right, keep them coming.
Are you ready for this one? This is an easy one. Want happier coffee farmers, teach a whole bunch of them how to do something else that isn't coffee. Page 57. It sounds like a harsh thing to say, but it's not the first time I've heard it. And I've heard it in different ways. And I've heard it in ways that talk about food security, diversification of income. There are a lot of people that are doing this. Could you expand a little bit on why this is something that would be said, and is this something that some people might take this the wrong way?
Yeah, probably.
Yeah.
I'm sure I'll get in trouble for this one, but I guess the idea is a little more innocent. Is basically that the price of coffee is the intersection between the supply curve and the demand curve. So there's more on the market. There's an oversupply. The price falls so that it will all get sold, because everything has to get bought and sold that's on the market any day. So you want the price to be higher. Supposing that the demand is the same, you've got to have less supply. How do you have less supply when people need to grow coffee to make ends meet? Some of them grow something else, would be one way.
Yeah. I think that there's a lot of other, there is quite a bit of supply, and that is an issue. So page 78 is another interesting concept that you wrote about that I kind of enjoyed reading. And we just talked about this briefly in the intro. We were going to talk about the ratchet effect. Could you explain what this entails in the coffee world?
Yeah, so basically when market conditions change to the disadvantage of a seller, they might change the price or change the product. To maintain margin, or to be able to keep price where it is so as not to lose clients. When the market conditions go back to something that favors a seller, would they change? Do they lower the price again or improve the product again? Well, if everybody's gotten used to it and sales are the same, maybe not. And there are certain cases we've seen in the history of coffee when this has been the case, that basically blend components have changed because overall price has risen to include more lower grades of coffee. And then when prices fall again, everybody's already used to how it tastes and how it's composed right now. So price falls, margins increase. Why switch blend components back to higher qualities and higher grades? Again, not that everybody's doing that. No way. There are some examples, mostly from the large blends where this has happened in coffee history.
Okay, well, I have a question then, Marty, for you. How many times have you been into a coffee, like anywhere, where the price has dropped for a latte? Like it was $3 and now it's $2.50.
I don't know that I've ever seen that.
Right, so that never happens, but gasoline does that. The price of milk does that, but the cost of consumer items like that just never does that. Yeah. And I think that maybe that has something to do with the ratchet effect. And I thought that was kind of an interesting concept where, I've seen that happen where the price of coffee goes down, but the the 12-ounce bag all of a sudden appears on the shelf and it's still the same price. It's still $20. I'm like, wait, that was 16 ounces last week.
Mhm.
I think you wrote that in the book too. I thought that was kind of a pretty interesting insight. And we move over to the ethics of symbolic value, page 82. I love this whole section. We don't have time to talk about all of this, but I think that this was a really interesting thing to mention here, because this is really about the value of the coffee itself. If you remove all of the marketing materials and you have a cup on the table and you're blind cupping it, about the intrinsic value versus the extrinsic value, perhaps, if we want to talk about that. You say here, if you really want a coffee from a celebrity farmer and a price is worth it to you, then you should buy it. But keep in mind, on page 82, you wrote, keep in mind that when an equally or nearly as good coffee from an unknown subsistence farmer without access to the same resources as a celebrity farmer shows up for half the price or less, it's not because that coffee is half as good. The price difference is due to the difference in access to marketing channels, capital to build an international brand, and resources to host visitors and so on. I just really appreciated that you wrote about this and that you included that into this section. Do you have any additional thoughts on that you want to add?
Well, thank you. Yeah, I think this is proof that in a lot of, in at least some parts of the coffee spectrum, it's really not commoditized. Talking specifically about green coffee, because of course roasted coffee is very much uncommoditized as a branded product. But even in green coffee, their symbolic value does play a role. I mean, just look at if you can pull up like the Cup of Excellence auctions by different countries, you can see that in some countries the same score will get you a much higher, much lower price. Like I think I was looking at El Salvador versus Nicaragua, and for the similar scores, the Salvadoran coffees were selling for much higher prices. Why is that? Who could explain that? But symbolic value, just like the name of a farmer who's really famous, or the name of a varietal, supposing that it's not a key factor in the sensory quality. But this stuff exists. Like in this example here, Kona coffee, an 88-point Typica from Kona versus 88-point Typica from Colombia. What's the difference? Would you say that cup is worth double? Maybe for some folks, but symbolic value is definitely a big part of the prices of some of these really high value, high priced coffees.
And I would also add to that the cost of production and the land value in Hawaii versus parts of Colombia might be different too. So the actual cost of the production of Kona would be much higher, and the land value, perhaps even in Costa Rica, where you have the cost of labor is higher. So it's not only symbolic, but it's also production costs. Because I live in Lincoln, Nebraska, where the rent is a lot cheaper than it is in New York City. So I would assume that a gallon of milk, or things there would be a higher cost of production, so things would cost more in New York City. So I think there's
I don't know. I mean, that's one way to look at it. That's why people would want to charge more, or would need to charge more, and would be reluctant to charge less given an oversupply. But that doesn't really have much to do with the utility that this is creating for users of the product. So there's a lot of factors that go into this, and a lot of ways to look at it that it's really, really hard to pin down what's actually at play.
Marty, you had.
Yeah, in fact, you did a pretty good job of answering one of the questions that I had written down, and that it's on marketing strategies. And my original question was centered around the auctions, like the strategies such as the best of and fill in the origin, or the Cup of Excellence type things. So we all know that raises the direct value of the winners of those auctions, and the marketing based on all centered around that. Is there any collateral effect, good, bad, or indifferent? In other words, if there's a Panama that's setting world records from La Esmeralda, or is there other coffees that the industry knows that's similar, or would score on a cupping table the same, that might actually be lifted by that. Did you see that? Was it lifted by that? Was it pushed down price wise by that? Any collateral or indirect effect, I should say?
Yeah, I think we do discuss this at length, and I can't guarantee it's all coming to mind right now, but I think like on the one hand, it's positive in that it draws attention to coffee, draws attention to how good coffee can be and how much people can appreciate it. So, ideally that helps to change how people think about what coffee should be worth, on all levels. But at the same time, honestly, I'm kind of bearish on the idea of these like super high priced coffees at a quality when that quality is not that differentiated. I mean, these super exclusive, like mid 90s coffees, yeah, there are probably very, very few of them in the world, but when like every small town across Colombia has a contest, and like 85 and 86 point coffees are going for 2 or 3 times what they would be costing on an importer's offer sheet, that in my mind, that's kind of a market distortion, and fills people's heads with expectations that that's what it's worth, when in reality a lot of that price that's being paid, that super high price, 3 times what they could potentially sell it for, is a symbolic value that comes with the fanfare and the experience, and wanting to support whoever's putting it on, and if you're thankful for somebody for inviting you to it, then any number of things could go into that.
Sure.
That would come down to symbolic value.
Well, I have a really nice slide here that's just full of words. And this is one of my favorite passages from the book, page 191, the Polo of coffee trading. I was told that maybe it would be better for you to read it, or maybe we could just have, would you like to read it, or do you want me to read it? I'd be more than happy to. Or
yeah, I can give it a try. I was always the slowest reader when we had to do this in elementary school, but I'll see if I've gotten any better.
Yeah.
Direct trade, direct farmer sales to roasters in other country, works only for large estates. A quote from someone else. Even relationship coffees raise equity concerns because they're easier to establish with estates than with small farmers or smallholders or co-ops. End quote. Doing business with large estates isn't a bad thing, but it's dishonest when equated to social impact. Why? Because the subconscious neocolonial inkling in the global north coffee consuming countries is that everyone is poor in developing coffee producing countries. So dealing directly with any of quote unquote them and transferring currency to them equals impact. This could not be further from the truth. When commercial relationships with well-off coffee farmers, farm owners in developing countries are combined with a marketing message of altruism and social impact, this is not only misleading and dishonest, but exploitative of the suffering of smallholders who do not have the same access to specialty buyers. This is something we see a lot. Like, I paid this. Look at me. That's a good thing that has to happen. But we can't always say that there's social impact, an improvement in someone's standard of living associated with this, when this just, maybe I'll switch out my Land Rover every 3 years instead of every 8 years, which, of course is the case sometimes.
Right.
So yeah, that's pretty much the idea. It's the way around is better than what I could say it.
No, and I think that like this kind of struck some memories of me traveling around the world. Like, I've been a green coffee buyer, and I did the whole very cliched thing throughout my entire career. But there was a time I was in a certain country, and I owned a coffee roasting company here in Lincoln, and I remember at that time I was pretty well in debt. It was a struggle. First 5 years, it's hard running a business. And I went, I visited a farm, and I was, I wanted to buy fair trade organic coffee, and I was really concerned about, doing the right thing and helping support smallholder farmers. And I remember going to a farm and realized that I was definitely the one that was not well off in that situation. And I was thinking like, wow, okay, well, all right, well, this is the reality. And you know, boy, did I got caught off guard that, the entire world is not poor. And I'm actually, and then I started driving across Nebraska thinking like, wow, there's some of these farmers who've got quite a few acres. And actually, wow, all right.
Yeah.
So, I mean, it's a big world out there, and not all farmers are poor, and quite a few of them are quite wealthy. They just, anyway, great passage,
Yeah, I mean,
good
to
insight.
to reiterate, there's nothing bad about dealing with folks that are well off, but
No, not at all.
I think it is dishonest when this ends up going into a marketing message that like we're helping poor people essentially, when it's
Yeah.
that's not always how it is.
Yeah, even if you think you are, sometimes you're not, and even positioning yourself to do that is sometimes, anyway. So let's see here.
Yeah, you got it.
Page 11, 111. This is kind of what you wrote in the book too. Many farmers the author has interviewed are convinced that the only way to improve their situation is to produce more. It's a whole nother aspect of the book. I love this. They're given loans to modernize only if they cut down shade trees and plant hybrid varieties. They are not told, however, ... Page 111. And I believe that you kind of go into the maintenance of this modernization of a plantation. What kind of situation do they get themselves, does someone get themselves into when they're given these loans?
Well, I mean, there's a lot of factors involved and a lot of different sort of cases. So I'm not saying you shouldn't renovate coffee trees. I'm not saying you should take out half of the ones you have there, but in some of these really extremely technified systems that just have massive amounts of coffee trees at super high concentration on the land in complete monoculture systems, end up with low soil quality, falling productivity, and or I guess most certainly a very high requirement of synthetic fertilizer that has to be purchased. So a lot of times they can end up with a higher cost of production per unit of output, which basically means their break-even price gets higher. And in coffee, where the price is always changing, that implies a higher probability that their cost of production is going to be higher than the sale price more often than someone whose cost of production per unit of output is lower. So basically, they're at a much higher risk. And this could be the profit maximizing strategy for some farmers. If they have access to they have the ability to hedge, they have the reserves or access to credit to be able to weather storms like a year with no income. But smaller, more vulnerable farmers that essentially live hand to mouth can't go an entire harvest selling at a loss because there's nothing to live on. So I guess the point of that whole thing is there are different strategies and different techniques that work better for different folks depending on their risk tolerance and a bunch of other factors that are listed out there.
And I walked away, from again experiences traveling, with seeing these situations where there are a lot of dependencies on certain types of chemical fertilizers that now it's a regime that they have to continue to invest in year after year, and their soils become more depleted and more depleted. And I've talked with many farmers that say, I wish that 20 years ago, my father just kept the shade trees, kept the varietals in place, because now we've learned the lesson. And it's a story that I've heard time and time again that I wish that more people would be able to share those kind of stories. So I just wanted to bring that up, say, hey, heard this before. So page 111, read it, check it out. And you've explained it well. So protesting low prices. This was an interesting concept. I thought this was a little edgy of a concept on page 142. Do you think this one will get you into trouble? Do you remember this one?
To be honest, I don't.
Okay, so everybody.
No.
Oh, I get it. This is a great one. if you had a catfish restaurant, but no one patronized it because they wanted pizza, would you protest and clamor for subsidies and demand that some high power force would dine at your catfish restaurant? Do you remember that question? Basically saying, if people don't want catfish, would you still have a catfish restaurant? Anyway.
Yeah, I guess equal opportunity critic here. This is kind of on the other extreme that, there are distortions and manipulations of markets. There are, the extensive use of imbalanced bargaining power. There are things that are going on wrong, but at a certain level, it comes down to demand for product. And if this product is, it's not creating more utility for people than lots of other products that other people are happy to sell for you at a low price, then there's not a whole lot you can do. I mean, if you're in Ecuador and your production cost is $2 per pound, and people enjoy your coffee just as much as one from Peru whose production cost is $1 a pound, then in some cases, there may not be a lot of good options with that type of coffee needing to charge a price that a lot of folks aren't willing to pay because they want something else, or they can get that way cheaper somewhere else. So there's certain realities of the market that we just can't avoid. There's some that are not realities, that are things that need to change, but others that they just are.
And I think you explained that really well in the book. And I highly suggest everybody before they protest some of our conversations, that they read this book thoroughly to see both sides of every conversation we are having, because I think that you do a very fair, you take each issue and conversation fairly, I think, from both sides to really explain the fundamentals of how things work. So with that said, why deforest? And I think I love this conversation because I'm wrapped in this on a daily basis. Page 158 is this production tunnel vision. And it's basically, it's really short. Everybody, it's an encyclopedia of conversations about economics in coffee, but this basically, I believe it's when you want more yield, you would expand it to more forest. Is that pretty much it?
I think this has more to do with the elimination of agroforestry systems in order to increase yield.
Right. Yeah.
Because quite often there's very little consideration of production costs and actual profit. You just you spend what you have to spend to keep the wheels turning. You sell for as high a price as you can, and then you kind of cross your fingers and hope that it works out at the end. But oftentimes there's a lot more focus on top line than bottom line. So how much am I selling dictates how much money I make. And if that's the only consideration, without really thinking about production costs this year or in 10 years, it can be attractive to cut down all these shade trees, get more sun onto these plants. Yeah, they need more fertilizer to be able to live, but you can get more coffee out of 1 hectare of land if it's a super dense monocrop. And your cost of production might even be the same with much more income for a year or two, but eventually you've got to pay the piper, and the cost of production will rise.
And I've got about maybe 30 more slides. I'm just kidding. I'm actually about 10 more. Sorry, Dietrich. I know it's I wish I had some fireworks, but passive organic is another really interesting topic. We don't have to go into that, but that was on page 179. Everybody check it out. If impossible, abandon. Again, you mentioned something, just a little hint there, page 170. And then again, let's go back to your instructional video or your educational videos that, this one, quality information asymmetry. I didn't quite get into this one, but we can explain that if you want. And then we have holistic solutions, value add. How much money do you make? Page 219. I love that. Just that whole concept of asking a coffee producer. Like we have like this very easy, it just seems like we don't even think about it. Like you can simply just say, hey, how much coffee or how much money do you make? And in the United States, we would never go downtown to a coffee shop or next door and, or into a grocery store and ask the cashier, how much money do you make? We're concerned about you, right? Like, so this just made me think this book was really starting to address a lot of those issues in a different way. So yeah, anything you want to add to that?
Yeah, I think you got it. Basically, this is a real thing. A lot of coffee farmers are not earning enough to have a satisfactory standard of living. That needs to change. And how do you make that happen? Pay them more. How do you know what you need? How much more you need to pay, or who do you need to pay more to? You've got to know kind of where they stand right now. But yeah, this is strange, and this whole relationship of I want to take care of you is uncomfortable. It's uncomfortable, especially given the geographic distribution. I mean, it would seem outrageous to have a smallholder coffee farmer calling up a roaster and saying, "How much do you pay your baristas? I don't know if I want to sell my coffee to you." But if all things are equal, then that would kind of be the case, right? So yeah, that's what I got. Again, I'm probably better at writing than talking. Yeah.
Well, and I'm probably better at reading than I am interviewing. So and making slides too. what can you do as a coffee buyer, roaster, or consumer? After like thinking of all of these slides, or reading this book, I would say what I would suggest people do is be more informed, continue to be open-minded, continue to explore these ideas. But do you have any specific actions that you think that a green coffee buyer or a roaster or consumer can make? Like what's one thing that they could do that with coffee economics, as far as like if they're concerned about something? I don't know. Maybe I can ask you another question.
Well, I don't have a fix. There's a whole book's worth, but I guess to just name a few notes. Understand the nuance that there's no good and bad. Everything's more complex. There's a lot to learn. I tried to synthesize a lot of what I've learned over the years doing work and reading many thousands of pages of academic articles and things into this guy here, but this is only the beginning. There's a lot more to understand. I think in order to be able to really be actors in this and understand the real impact at all levels of our actions. So that's what we've got this fine print in the back here for all of this additional reading that can be done. So learning stuff is not the solution to all these problems, but it's not a bad place to start. And that's, what I can think of right now.
Marty, you had your hand up.
Yeah, I've got 17 questions here. No,
you've got an hour and a half, so okay. It's your turn now.
I'll actually, because I think we can do this, I'll tie two of the questions together. I've only got three, but I'll tie two of them together. What was your driving force to writing this book, and who did you expect to read it? Who was your reader?
Sure, I appreciate the simple questions.
Sorry.
The motivation to do this whole thing was honestly, and I don't want to speak badly of anyone at all, but I had a lot of conversations in my first few years working in coffee, after previously working in management consulting for a while and in rural development for another while. And in both cases, my job was doing lots of research, figuring out in a short amount of time how all that complex stuff works. So I took the same approach to coffee, trying to figure out, how the pieces fit together in this, how to make it work better for more individuals. I had a lot of conversations with folks subsequently when I started trying to move some beans around the world, and realized a lot of partial understanding, a lot of partial truth being expressed through different mediums, and I guess I wanted to strengthen folks' filters when this information that's coming at them, and know how to interpret this, recognizing the nuance. Like, you hear different claims like, "Oh, fair trade is stupid. Fair trade doesn't work." Okay, direct trade is better than fair trade, or fair trade is better than direct trade. I don't know, but they're easy arguments to make, but very, very hard arguments to complete, I guess. So I see different messages going around, and people interpreting them in different ways. So I just wanted to put like as much as I could into one book, to explain this nuance, so that folks can take those kind of messages that are getting lobbed at them every day and have the full context to be able to interpret what they want to support and what they don't.
Outstanding. Now,
What was
my
the other one? I
last,
forgot already.
the other one was who's your reader? Who did you expect to crack that book?
Well, I think anyone working at any level in the coffee industry was the ideal reader. But of course, if consumers want to get this deep into things, then that's even better. Because I think we've all kind of have to hold each other to a certain standard all along the supply chain, in order for things to work out.
It's amazing how I see a lot of the consumers at the cafes at how well educated they are. So I would not be surprised if there's a huge percentage of the consumers that would thoroughly enjoy this read. My last question was, any surprises along the way? I know you went through a extended process to gather all this information. Any surprise? Any big surprise?
So many. I mean, as I did extensive research into this, I thought I knew what I wanted to write about. I thought I kind of knew the answer, and I was just basically doing research to back up what I already thought I knew. And it turned out I didn't know anything. I uncovered so many misconceptions of my own, so many biases toward one thing or another that I didn't even know I held. So I learned so much doing this myself, and
Wow.
yeah, I guess I'm just glad I spent 3 years doing it rather than just whatever was in my head at the time. It would be a totally different thing.
Well, that might be good advice for anyone that thinks they're a know-it-all on a subject, is to actually sit down and take the time to write a book. You might learn something.
Yeah. And maybe in a couple of years, if I do another one, I will think everything that's in this one is just totally wrong, and because everything has changed already.
Well, I think
that's what happens when you do research and find new stuff. What was I thinking last week?
Well, I think everyone on this call here will agree that coffee, as a general rule, the coffee industry is constantly evolving. I mean, we don't even tamp like we used to, So there's a constant evolution going on. So there may be some truth to what you just said.
No, I wrote a thesis for my master's degree 5 years ago, and I don't want to read it again. Not at this point. There's no way. Not after reading this book. I'm like, this.
Yeah.
After what I've learned the last 5 years, I just feel embarrassed by the thoughts and the information that I had back then.
I think I mentioned in the introduction somewhere that it's the social sciences are slippery. This stuff is always changing. We're just like trying to make up little drawings to try to explain really, really complex things happening millions of times. And what drawing we're going to use to try to explain this today may be different 5 years from now.
Exactly.
Well, there's one thing that's not different. Coffee's still cheap. And, let's figure out something to do about that. So I think that we're over time. And so again, I'm John Ferguson, Coffee Tech Talk. We'll be back someday. I'm not sure when, but again, thanks, Karl, for coming on the show. Cheap Coffee. You get it at Roast Magazine or Roast. Where can you find this? Actually, you can tell us.
Find it
where
on
to find it.
In the US on Roast Magazine website, on digital version on Amazon or an Apple store. And yeah, we're working on getting it available more easily elsewhere.
And I'll tell you one thing: it is reasonably priced, and it's valued, I think, a little bit on the low side. I think it's worth more than what it's priced at. So good job.
You've got either cheap coffee or cheap books. I'd rather have cheap books.
Right.
Sorry, book printers.
Yeah, I like the affordable book price. Thanks. So, Marty, signing off.
I just want to thank you, Karl, for coming out and sharing your knowledge and your viewpoint. Appreciate that. And I am Marty Rowe, and owner operator of Workbench Coffee Labs. And now that COVID is easing up, we're getting ready to set some dates. So be on the lookout.
Well,
Right.
I guess that's it. See y'all later. Have a good night. Thank you.
Thank you both so much.
Thank you.
Bye.
Good night.